of people I know who are into this, but they don't know that this exists.
Okay.
Or this club.
Okay.
Have you seen one of my places?
Yeah, that's
Okay.
how I like found it.
Oh, okay, good to know. We only ever do one.
All right. Ready? Okay. So stable coins. Do we all know what basically what a stable coin is, right? It's just a cryptocurrency with a value that's pegged to a fiat currency. So example, USD stable coin always worth $1, a euro stable coin always worth €1. Actually, most of the time, we'll see like a stable coin that's not exactly pegged to a specific value. It's not one-to-one, but we'll see how it's kind of like stable. So the use cases for stable coins. Well, so when you're trading on the markets, usually you denominate an asset's price in a fiat currency. So that can be seen on the crypto markets too. A lot of the times you see trading between like, let's say Bitcoin and Tether. So because USDT is always $1. So that's how they kind of denominate assets. Cross-border payroll. Do you want to talk about that, Abdullahi?
Yeah, so cross-border payroll is just paying, like, for example, new companies that are starting up, they have like, they're not really looking for crypto talent in like just one location, like they'll outsource their talents and internationally, and like how do they pay those people? So with stable coins, they're able to pay much easier doing payroll work and a lot of that stuff compared to like, for example, sponsoring a lot of like the visa requirements that are needed.
So like why pay stable coin as opposed to like Bitcoin, Ethereum?
Well, because Bitcoin is very volatile compared to like stable coins. Stable coin is generally backed by, for example, like USDT is, I don't know, back like the breakdown of like its balance sheet, but like for example, USDC has treasuries that it's backed by, so it's much less volatile. So movements and a lot of collateral, you don't have to deal with any.
And probably also tax reasons as well, because like receiving like Bitcoin, I'm sure there's different tax implications than receiving a stable coin. So remittance and business to business payments, yeah. Same idea, right? Just kind of like
Lower fees and more instant compared to like Western Union.
Yeah.
Western Union. I know MoneyGram, they were trying to develop their own or use blockchain to enhance, like make things much more efficient.
Yeah, so
And then
That's-
yeah, P2P currency is just like, for example, like when inflation hits a currency, and like, for example, Turkish lira was one huge example of like their currency now being over like valued. Well, undervalued, yeah, sorry. It's like inflation is a big concern for some like these unstable countries, and so maybe stable coins makes it much easier to transact.
all right. So some popular stable coins you've probably heard of, USDT, Tether, USD coin, Binance USD, DAI, Terra USD, Magic Internet Money. So how does a stable coin maintain its value? The big question. Well, a stable coin maintains the same value as a currency that is pegged to because it's either backed by cash of that currency, assets with greater or equivalent value, or a mix of both. A stable coin is able to keep its intended value when users are confident they can redeem their coin for the peg currency. It's kind of like how a normal currency kind of has its value. It's the people believe in it. And so if people know that the stable coins are not fully backed, then the price should fall because they don't have confidence in the fact that it can be redeemed for that amount of money. So that means that the value of the supply should be less than or equal to the reserves of whoever manages the stable coin. And so the market value of a stable coin is kept stable by arbitrage. So like sometimes Sarah mentioned earlier, like Tether can go up to like $1.01 but it'll come back down eventually because people will see the arbitrage opportunity and just kind of like equalize the market because people typically always believe that one stable coin is $1, for example. So it'll come back to normal. Yeah.
Do you know why the price would go up in the first place?
Basically like market pressures, like if a lot of people are selling an asset, if there's a big sell-off,
Uh-huh.
the 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 relative value of the dollar like technically goes up. So yeah.
But generally, when there's like a risk off regime, you'll run to risk haven assets like PN, dollar, and like treasury notes. You'll go after government-backed securities and general go up a lot during that.
So we're going to talk about different types of stablecoin management or issuance. And so the first one is a centralized system where a company has sole control over the supply. The company will mint and burn the tokens as needed. And so basically how this works is that a customer will pay cash to a company in return for the equivalent amount in stablecoins. And then the customers should be able to return the stable coins for cash, kind of like a bank. And now we have decentralized stablecoin issuance, where everything is managed by smart contracts. And basically the premise is that the stable coins are borrowed by putting up collateral with the collateralized debt positions. And so the value of the supply of the stable coins is backed by the collateral. And so users give collateral to the protocol to borrow the stable coins, and then users return the stable coins plus any interest or fees to regain their collateral. We're going to go more into depth on that later. And then the third one is rebase stable coins. So this was what I was talking about. Like some stable coins aren't necessarily one-to-one with the currency, but basically this kind of system is about the balance of how much you have. Like your balance will always remain the same, but the price of each token may not. So the supply is automatically adjusted daily, and so the adjustment is called a rebase. And so an oracle fetches the price of the stable coin. And so if the price is greater than the target, then more tokens are released into the supply to kind of inflate the currency and bring down each token's value. And then vice versa, if the price is lower than the target, then tokens are taken out of circulation to increase each token's value. And so when those rebases happen, your balance changes in the token, but in the target currency, it remains the same, or theoretically should. So we can go over some common stable coins and just kind of look at them and see what kind of systems they use, who's backing them, and like what kind of platforms they're on. So first we have USD coin. It's a centralized stable coin run by like Center Consortium, which was founded by Circle and Coinbase. And so USD coin, it's fully backed by cash equivalents, and short duration US treasuries. And we can see that in their attestations. They haven't released a full audit, but they do have consistent attestations. And we can see, if we zoom in here, that they are 100% in cash and cash equivalents.
What the hell is Yankee CD?
Yankee CDs are like, they're CDs in foreign banks, so they're kind of riskier.
Okay.
Yeah, you're lucky I asked my mom that the other day, or else I wouldn't have been able to tell you.
Like ironic name for the
Yeah, I'm not really sure why they're called that. I'm pretty sure that's what it means from memory. So USD coin can be found on Ethereum, Algorand, Solana, Stellar, Hedera, so smart contract platforms. And then, of course, it's wrapped on other chains, so you can use it on like Avalanche and other platforms that Center hasn't officially launched the coin on. Now we have Tether. This is the most popular stable coin. It has the largest market dominance in the stablecoin market, and it's a centralized stablecoin run by Tether, a Cayman Islands company. So it's under less regulatory scrutiny compared to Center, which is founded by Circle and Coinbase. So it's a US company. So it's under regulatory scrutiny by the US government. And so Tether, they claim to be fully backed, although this is the subject of controversy, as I'm sure most of us know and are familiar with. And so they're launched on the Omni layer, Ethereum. So the Omni layer is it's like a layer built on the Bitcoin network. I don't really know much about it, but so they're on that. Ethereum, Tron, EOS, Liquid, Algorand, SLP, Solana, and Avalanche. And so Tether also offers Euro Tether and the Chinese yuan and gold. So gold can also be a stable coin. So that's pretty interesting. So the Tether controversy. So Tether is known generally to be a shady company. Some people have faith in it. They're like, whatever, $1, yes, I believe them. But a lot of people are like, I don't know, it seems kind of dangerous that the most popular stable coin may not be backed. So kind of the general gist of what's going on with Tether is that Tether and a large exchange called Bitfinex, so they're operated by the same people. We have found that out thanks to the Paradise Papers. And so what happened was the New York Attorney General sued Tether for not being backed. And we will look at the settlement in a second. And so on March 30th, 2021, Tether releases an attestation by a Cayman Islands accounting firm that saying that Tether was fully backed at a certain point of time, February 26, 2021. And then on May 13th, 2021, Tether continues to claim they're backed and provides proof as part of the settlement. You can look at the proof really quick before we get to the settlement. So check this out. Two pie charts. Do you believe it?
Compare and contrast like the Coinbase one.
Yeah. So you can see that 75.85% is in cash equivalents, and short-term deposits and commercial paper. And so if we look in the breakdown of the 75.85%, we can see that 65.39% is commercial paper. So that's like about half of their what's the word? Their reserves is in commercial paper, making them one of the largest holders of commercial paper. I mean, whatever you say, Tether, but you know, so yeah, that's pretty interesting. And so also, so I went into the settlement, and where is it? Here we go. Opened on the wrong screen. Okay. So this is a settlement. I went through and highlighted some key points. So first, in March 2017, they lost their banking, basically. You guys can't really see that. Let me see if I can zoom in. There we go. So first, they lost their banking. So they didn't have any bank service. And so, so at that time, approximately 50 million tethers were on the market. And then so after they lost their banking, that number increased to 108 million tethers. So they were issuing tethers without having an actual bank account. And then in June 2017, Bitfinex opened an account at Noble Bank. And then, although Tether did not open an account at Noble Bank or any other bank until September. And so in the meantime, Tether deposited the vast majority of its cash holdings into a trust account at the Bank of Montreal in the name of its lawyer. And so the Bank of Montreal account never had more than $61.5 million at the time of deposit, which is a little bit less than 108 million that they had issued. Where the 40 million is, not sure, it doesn't really say here. How do I get to the next page? There we go. Oops. Okay, so until September 15th, the only US dollars held by Tether backing the approximately, by this time, the supply went up to 442 million tethers. And so the only US dollars backing that was $61 million, according to the Attorney General in this file. So between June 1st and September 15th, Bitfinex held approximately $382 million of Tether's funds in a commingled account. So I guess that's where the money actually was, but that should have been held by Tether as backing for Tether's, but it wasn't. So they were kind of like sharing money, which is not good. So Tether and an auditor agreed that an auditor would conduct verification of Tether's assets as of September 15th. So on the day of the audit, Tether opened an account at Noble Bank, and that day, Bitfinex transferred the $382 million to Tether's account, and then the auditor did the audit. And so we can see here that this is the audit. They found the money. All's well, right? So, but at no point did Tether inform its clients or the market that from June 1st until September 15th, they were not actually backed. So that is why people do not really trust them. Wait, I'm missing some parts. Oh, here we go. So no one reviewing the audit would have reasonably understood that $382 million listed as cash reserves had only been placed in the account the very morning. So that's why this lawsuit exists. And so in summer of 2018, Bitfinex borrowed $400 million from Tether because they had been hacked. I believe that's the reason why, right? And then so that's not good because that means Tether is not as backed as they should be. And so basically what happened after that is Bitfinex's accounts got frozen. So that's basically the gist of all of this. So Bitfinex kind of like lost their money to the money being frozen. So Tether didn't have access to that money. If there was like a run on Tether and people were trying to redeem their tethers, Tether would not have been able to make those payouts. So that's basically the gist of the settlement. I will upload this in the Discord if you guys want to read it. There's not much left. Yeah, I think that's the end of all my highlighting. So yeah, that's why people don't really trust Tether. They're a bit shady. They don't really comply with stuff. They settled for like $18 million over this thing. So yeah. So we have DAI, the most popular decentralized stablecoin, and it's run by a DAO called the Maker DAO, and it's governed by holders of the Maker token. And so this is what I was talking about. It's backed by collateralized debt positions. So this makes it soft pegged to USD because it's not exactly backed by USD. It's backed by assets equivalent to USD. And so it's actually over collateralized because these assets are volatile. They can move up and down. And so they want to make sure that they have some time to be able to liquidate them before it gets to the point that DAI is no longer backed by those by the value of those assets. And so DAI is only officially on Ethereum, but it's wrapped on other chains. So specifically how the Maker protocol works. So users deposit assets into a Maker vault to collateralize it. Like let's say they deposit like Ether. And so with that Ether, the user can generate DAI, and to retrieve their Ether back, they must pay back the DAI that they borrowed and then an added interest or stability fee. And so let's say that someone borrowed some DAI and the ether kind of goes down, then that vault will be liquidated through an auction through the maker protocol. And so each vault type, each type of asset has its own liquidation ratio that's kind of decided by the DAO based on how risky they think the asset is. And so if the price of that asset reaches to a certain point, then it triggers a liquidation to make sure that there's enough cash on hand to back the stable coin. And so the prices for that trigger the liquidations, the prices are obtained from oracles. So it's all decentralized process and it's all backed, which is pretty cool. Another cool project is Magic Internet Money. It's kind of the same premise of Maker, but it's a little bit different. So it's run by Abracadabra Money. That's kind of the name of the overarching project. Right now it's maintained by core developers, but governed by holders of the stake spell token. And spell is the protocol token used for incentivization to onboard people, get people to use the project and stuff like that. And so Magic Internet Money is borrowed and backed by collateralized debt positions, just like DAI. And it's on a lot more chains than DAI is. It's on Ethereum, Binance Smart Chain, Phantom, Avalanche, Arbitrum, and those are like the official coins on those platforms, which is pretty cool. And so how Abracadabra Money works. So users, it's kind of the same thing, but users that can only deposit interest-bearing tokens as collateral. So that includes liquidity provider tokens, stuff like Yearn finance tokens. So if you deposit some money into Yearn, you're generating interest from yield farming, basically. So they have a lot. They allow a lot of yield farming tokens as collateral. And so the user can borrow an amount of MIM that is less than the value of the collateral. I think the max is like 90%. And so if the value of the collateral falls low enough, just like in the maker protocol, the collateral gets liquidated and the user gets to keep the stable coins. And although the user gets to keep the stable coins, they're still at a net loss. So you don't really want to get liquidated, but if it happens, I mean, you're not at a complete loss. So if the user has not been liquidated and wants their collateral back, they can return their MIM plus interest, of course. And so this is kind of from the Abracadabra Money documentation. That's kind of what I was talking about before, how the arbitrage keeps the price of stable coins in check, but also has some mechanisms through the protocol. So let's say, for example, if user has debt in MIM and MIM is below $1 on a market, it's in the user's best interest to buy that discounted MIM to repay some of their debt. So this purchase raises the price of MIM towards the $1 mark. And on the other hand, if a user has assets eligible as collateral and MIM is above $1 on a market, they could borrow some MIM and then sell it, profiting from the premium. And so that sale of MIM will lower the price of MIM towards $1. And so users can simply arbitrage between markets without interacting with Abracadabra, like I was mentioning before. Okay, so Ampleforth, a very interesting stablecoin. So this is the rebase token that I was talking about. So Ampleforth, it's governed by holders of the fourth token, and it algorithmically adjusts the supply at the rebasing, like I was talking about before. And so Ample, the coin, may change in value, but your balance in your wallet denominated in dollars will remain the same. And so it's on Ethereum, Binance Smart Chain, Avalanche, and Harmony. So yeah, that's stablecoins. Any questions about stablecoins? Anything you want me to go back to? Anything you want to talk about? Well, we can take a look. Right now they're at $1.39.
That's not good.
I mean, it's okay because it's algorithm. Oh my God, algorithmically stable. So the rebases will adjust and your balance will basically remain the same in dollars. So I don't know.
Can you see the prices?
Oh, oops, sorry. That's a very good point. So yeah, it's a little bit volatile. It seems to remain above $1. That's what I'm seeing.
Like how?
Slightly
often do
below.
you
It's actually once a day.
rebase?
Yeah, so I guess there's some time in between the rebase where your value is actually not exactly the same.
Yeah.
It kind of changes throughout the day, but like eventually it'll come back to equilibrium.
But then I know I'm not seeing that it goes back to like one every day.
Oh, well, no. So the price doesn't, oh, wait.
1-to-1.
How's this price determined?
Hmm?
How's this price on the graph determined? Just
Um,
supply and demand.
yeah, just supply and demand of it.
Where do these numbers come from?
Exchanges.
I think you can find like specific exchange, like you click on, yeah, there you go.
Yeah.
Yeah, so they're on Uniswap, SushiSwap, Bitfinex, all the big exchanges. So more people buy the coin, then the price is going to go up.
So hypothetically, every day it should hit $1 when the rebase occurs.
Yeah.
I guess.
It's-
I don't know.
So I'm kind of curious why that isn't reflected on the graph.
That's a good point. When I think about it, probably should do that according to, but I don't know.
So rebasing like scales the existing tokens so that their value is back to $1.
I guess it should be that way. Yeah.
I'm kind of curious, like it says 24-hour lows.
Well, I mean, if you think about it, like in the real economy, this is a real economy, right? Inflation doesn't hit instantly. You know what I mean?
I think
So
it's a big assumption to make that this is a real economy.
I don't know. Well, this is like real life. It's not like theoretical. This is like real time, you know. But
Could you show the max?
yes. So I don't know.
Yeah.
Pretty interesting. So like you can see it does return to equilibrium a lot. It's just not instant.
Oh, I don't know what's up with that stable session and then
Let's see, when was that? Summer of 2020.
Wasn't that when everything crashed?
Summer of 2020
Oh, wait,
was
never mind.
that was DeFi summer.
Yeah.
So I guess there's a lot of demand into altcoins, I guess, including Ampleforth. I don't know. Anything else, guys?
are there decentralized oracles? I haven't read it. So.
Can you explain more about Oracle?
Yeah, I can explain a little bit more about oracles. So oracles, basically it's a data feed that's supposed to be decentralized. There are like a few sources that are like picked out by like, let's say like Chainlink. Chainlink is an oracle service, I guess you would call it. And so they have some sources and they kind of aggregate it. And I'm not exactly sure technically how it works. I haven't really looked into it, but it's able to kind of like give information to like smart contracts and stuff like that. And to answer your question, I don't really know because I don't really know that much about oracles. So
for these bridges between exchanges, does anyone know if they're inherently trustless or are they decentralized or do they require some authority?
between
Are there any that don't?
Smart.
Because I'm not like bridging from one chain to another one.
Yeah.
well, we did talk about this in one meeting.
Yeah.
I mean, there.
I think wormhole is decentralized. Wormhole, yeah. So some of them is owned by the supply and demand. So it's called atomic swap. Atomic swap. Yeah, where basically there are two chains, and then on one chain, someone agrees to lock that amount in the smart contract, and on the other chain, someone agrees to remove that.
Because I'm kind of curious how that circumvents the oracle problem can be done trustless.
Yeah, I think Oracle in this case is used for different.
Yeah, oracles are just data feeds basically. So it uses Ampleforth uses Chainlink. You can look into that. I'm not really sure if there's anything that like can like give us a quick answer of how it works. It's basically get data feeds in your smart contracts. I think Chainlink is supposed to be decentralized in a way. I'm not entirely sure though.
How do we figure it out? Yeah, that's twice. Oh, and before.
Linking the blockchain and crypto stuff to like fiat in like the real world.
That's one use case, but there are other use cases where you literally just use oracles to look at like the price and exchanges. Yeah, price network or something.
Yeah, I have like a bunch of like data aggregators and like also market exchanges that are providing their data.
So yeah, how trustworthy that oracle is.
So Chainlink actually has a case study about Ampleforth, so I can send that in the Discord later.
Some guy who's showing nest on the internet says Chainlink does not have a trustless way to verify whether the information given back to you is accurate or not. Instead relies on
Yeah.
centralized verification and speed resolution. I do need to read
That
case.
is true. See if we can actually see it out.
Yeah, they have perfect oracle because, for example, Price Network, I remember when they had like, when AFP was showing that one of the firms, like, price of Bitcoin was at 4,000. And it was like the whole, based on when they take like a sum of like all the 3 different data providers and then like give that average of that and like have confidence intervals and stuff like that, but it crashed because like someone reported at 4,000 with their Bitcoin.
They usually have markings, like how reliable it is.
Yeah, they have like a confidence interval.
Yeah, that's what I was thinking.
Should I stop the recording now?